Welcome to Deal Dialogue.
Hello and welcome to Deal Dialogue, a discussion on all things related to M&A and financing. I'm Rob Hickey, and with us is Tarek Chami, our production engineer. When you look at M&A activity and closed deals, there are two sides to every deal, the buyer and the seller. In this segment, our topic will be buyers in M&A transactions. Who are they? What some of the key considerations are when dealing with buyers, and what the general buying landscape looks like. Joining me again today is Jeff Ng, a director on RBC's mid-market M&A team. Jeff, thank you for taking the time to be here.
Thanks, Rob. It's great to be back.
Before we get into a detailed discussion on buyers, maybe it would be helpful to clarify what you mean when you use the term buyer.
Sure. So, in the M&A world, buyers are commonly referred to as entities or individuals who are looking to purchase and acquire control of a business.
I think a key word you just said is control, meaning that you aren't including investors who buy minority ownership stakes. Is that correct?
That's correct. Typically we think of buyers as entities who are looking to acquire more than 50% ownership in a business. They may either want to integrate the acquired business into their own or operate it independently. But in any event, the most important thing for them is that they're in a position to make all of the key decisions that impact the company and its day-to-day operations.
That's very helpful. What are the different types of buyers that are out there? You mentioned entities and individuals.
Well, to simplify things, we generally think of buyers in one of two buckets. In the first bucket, there are what we call strategic buyers, or buyers that operate in the same or similar lines of business as the target company. Strategic buyers could be competitors, suppliers, businesses operating in adjacent industries, or in some cases, even customers. They can also be public or privately owned. In the second bucket, there are what we call financial buyers. These are either institutions or individuals that pull capital from different sources for the purposes of buying one or more businesses. A few examples would include private equity groups, pension funds, family offices, search funds, and even wealthy individuals looking to acquire and play an active role in the day-to-day management of the business. I'm not going to get into too much more detail on these buyer types, but the bottom line is that there are a lot of different buyers out there that will have their own unique acquisition criteria and approach to managing the acquired business.
When we're thinking about strategic buyers, what are some of the things that they look for?
Well, like everything, I think it depends on the buyer. Many companies that pursue acquisitions are really looking to diversify and grow their business and benefit from increased size and scale. Strategic buyers will be focused on how complementary the target is with theirs, whether it allows them to expand into new markets, acquire new expertise, or achieve cost savings with greater scale. This may ultimately allow them to compete more effectively in the market, improve profitability, gain greater access to capital, and ultimately improve the valuation of their own business.
How do financial buyers or private equity firms differ?
Well, financial buyers or private equity groups, on the other hand, may be more focused on the financial returns over the anticipated investment horizon of the business. This investment horizon can be as short as 3 years, but can be as long as 10 years or more. These buyers are typically looking for businesses with good growth characteristics, opportunities to expand profit margins, and have low capital expenditure requirements. Financial buyers often look to partner with or back strong management teams. So businesses with a good second layer of management behind the owner or owners is usually very key. Strategic buyers, which we just talked about, also place a lot of importance on management continuity, but they may be able to use some of their existing management resources to facilitate a smooth transition, which can give them a leg up in this respect.
It sounds like there are a lot of potential buyers out there for business owners to consider when contemplating a sale. How would one go about determining who are the best buyers to approach?
Well, there are a number of things to consider when assessing the right types of buyers for a business. In the work that we do as a team, when we're working with sellers, we would typically begin by analyzing the company being sold to really understand its business model. And then we would try to identify buyers that would have a complementary strategic focus. In the case of financial buyers, we would identify groups that have investment criteria, interests, and previous acquisition experience relative to our client's business. Their investment criteria might include preferences around industry, size, geography, and certain financial metrics. In today's M&A environment, capital is a readily available commodity. So, business owners will often prioritize both getting good value for the business as well as finding the right buyer that will preserve the legacy that they've created. So, to the extent that we can also get a sense of the culture of an organization and how the buyer plans to manage the business after a sale closes, fit will also be an important consideration.
That sounds like a fairly thoughtful approach to finding the right buyer. How do you go about figuring out whether a buyer has the capital or the financial capacity to acquire a business?
Well, that's a good question. So for potential buyers that are publicly traded, there's obviously a lot of information in the public domain that will give us a pretty good sense of their financial wherewithal to do a deal. The same goes for larger financial buyers and private equity groups that have a proven track record of acquiring businesses. But for privately owned businesses, this may be a bit more challenging to determine. We often do quite a bit of research on private companies through the databases that we have access to in order to get a sense of a company's revenue, employee base, and extent of operations in order to pre-qualify them for size. Also, given that we've literally interacted with hundreds of different buyers across many industries as a team over the years, we may already have a pretty good sense of a buyer's business if we've identified them as a good strategic fit.
Wouldn't it make sense to focus on larger publicly traded companies and large private equity groups for all of your clients?
Well, in many cases, it does make sense to place more of an emphasis on some of these larger buyers, but I think it also depends on the size of the company that's being sold. Generally speaking, buyers will prefer to make larger acquisitions rather than smaller ones because they tend to have a more meaningful financial impact compared to some of these smaller deals, which can require just as much time and management resources. So when we are considering buyers, we often have to strike a balance between finding buyers that have sufficient resources to do a deal, but will also find the acquisition opportunity interesting enough and large enough to quote-unquote move the needle for them financially.
You're listening to Deal Dialogue.
Moving the needle, that sounds like a common phrase I've heard a number of times relating to acquisition interest. Given that buyers prefer larger deals, is it easier to find buyers for larger businesses?
Well, it depends on how you define easier, but I think what you're asking is whether there are more buyers out there when a larger business is being sold versus a smaller business, and the answer is yes. Typically, the larger the business, the more attention it will attract on an international scale, all things being equal. For this reason, we typically find that buyers of smaller Canadian-based businesses are either regional players or buyers based in Canada and possibly the US, while larger businesses may appeal to serious buyers across Canada, the US, Europe, possibly Asia, and even abroad.
I've heard companies that are thinking of a sale many times say they have a perception that foreign buyers will pay more for their business than a Canadian buyer. Do you think that's the case?
Well, I don't know that I've come across anything really scientific on this, but we've looked at some of the transactions that our team has worked on over the past few years, and one of the things that we noticed was buyers outside of Canada have tended to bid more aggressively than buyers based in Canada.
And why do you think that is?
Well, it could be a number of things, but as I mentioned, there's usually more interest in larger businesses and assets, which helps to bid up the price in a competitive process. Secondly, larger foreign players may also have greater access to cheaper capital, which allows them to bid more aggressively relative to their Canadian counterparts. We've seen this quite a bit in recent years with US-based buyers, given how competitive the financing environment is down there.
What does a buyer expect to see in terms of information?
Well, I think it depends on every buyer, but most buyers will want to understand the business that's being sold, what really drives the profitability of the business, as well as the growth potential of the business. So, generally, when we're speaking with buyers, we tend to customize our responses to those buyers, but those are some of the key things that they'll look for.
So when a company comes to you and says, I was approached by such and such a private equity firm or strategic, and I gave them a copy of my financials, let's see what happens, what do you think of that?
Well, I think financials are always key and as part of the information disclosure to buyers, but I think what's really important is how the information is packaged and what is the story that's being told alongside the numbers. So, ultimately, numbers are numbers, and sophisticated buyers will be able to read financial statements. But I think what's important for selling shareholders is to really paint the right picture for buyers to help them understand why the results were what they were, and why the results will continue to be positive going forward.
I've heard it said in the venture capital world that they won't even look at a deal unless it comes from a trusted source. Do you think that's relevant with strategic buyers and private equity firms as well?
Well, I think strategic buyers and private equity firms obviously will prefer to be in a process where there isn't competition, i.e. other buyers competing for the same businesses. But I do believe that having an advisor or an intermediary in the process is helpful in validating the story and validating some of the numbers that are presented and making the process more efficient overall for buyers.
When you think about the different types of buyers, strategic and financial, how responsive are they to approaches?
Well, I think it's hard to generalize because every buyer will be a little bit different and will have their own priorities and preferences. But, generally speaking, we find that financial buyers are very responsive, given that they're in the business of making acquisitions, whereas strategic buyers, even the ones that are very acquisitive and are looking for opportunities, obviously have a lot of priorities on the go managing their own business and creating values. So we find that it depends on what the buyer has on the go. Sometimes we talk to private equity groups and other financial buyers, and they've got a few irons in the fire, and so they're not as quick to react either. But generally find they tend to move pretty quickly when they need to.
You've talked about how sellers find buyers. On the flip side, how do buyers go about finding suitable targets?
Well, that's a good question, and I think that's one that many buyers often ask as well. So basically, there are intermediaries such as investment banks and financial advisors like our team at RBC that will identify and reach out to certain buyers for the businesses that they're trying to sell. Business brokers might have public listings of available companies for sale, and other advisors to business owners, such as accounting firms, lawyers, and wealth managers, can also be a source of opportunity. However, many buyers will often rely on word of mouth or their own proprietary approaches to source opportunities without the presence of an intermediary such as us, as I mentioned before, which might create unwanted competition for them in a sale process.
A lot of great information here. Just to wrap up the conversation, it's the fall of 2019, Jeff. What does the general buyer landscape look like right now? Are there a lot of buyers out there looking for businesses?
Well, I think in short, the answer is yes, there are. And this has been the situation for several years now. Since the Great Recession, we've been a very low interest rate environment, and both businesses and individuals have been looking for alternative ways to invest capital to generate higher returns. Corporations have strengthened their balance sheets and seen steady growth in their businesses since the recession, but in many cases, this growth hasn't generated the returns that their owners and shareholders have been looking for. So they've had to look to making acquisitions in order to supplement their growth targets. Private equity groups have also taken advantage of the current low interest rate environment by raising a tremendous amount of capital from investors. One of the more recent data points we've come across indicated that, at the moment there's over $1 trillion globally in private equity capital that investors are still looking to deploy in different businesses and assets. So, barring any major economic shocks, we would expect that the demand for good businesses will continue to remain elevated in the near to medium term.
$1 trillion, that's a lot of money. Jeff, this has been a very thorough discussion on buyers and some of the considerations when interacting with them in a sale process. Thank you for taking the time to speak to us today.
No problem, Rob. My pleasure.
Well, that's it for this segment. We hope that you found the information to be useful. Our guest today was Jeff Ng, and our production engineer is Tarek Chami, and I'm Rob Hickey. So long and good luck with your deals. Deal Dialogue is created and produced by RBC Mid-Market M&A.
Welcome to Deal Dialogue.